good. You are one step closer to being profitable. So one of the, like personally, one of the things that was affecting me, I look at, like in a day, I look at like 100 different markets. I look at like different coins. I look at different pairs on the Forex market. I look at VIX. I look at ETFs. I look at indexes. So like there are times like my head is all over the place. And then because there are so many trades, like in a day you have like 100 trades. So like sometimes you end up selecting the wrong trades, and then you come up with like 2 week streak, like you take some good trades, bad trades, and then you end up like breaking even, and then you don't make anything, right? But that is still not bad if you're not losing money. Yes, your time is being, you are wasting your time, because if you are depending on trading to
Exactly, to survive, you're just like,
exactly. But then it is not bad, because in the long term, once the money starts coming in, it's going to pay for all those times spent. It would have been worse if you end up losing your capital and then you don't have money. That would have been way worse. This is not a better situation, but it is better compared to when you are losing money. So I think what you need to do right now is to now limit yourself to a few instruments and see how that goes. So like one of the things, like, up until now, when you talk about synthetics, most people think synthetics is VIX 75.
yes.
Most people come trading and then the only thing they are trading is VIX 75. And their whole idea of the VIX market is based around volatility 75, right? So one thing I learned earlier on is that when you are trading, you don't have to, like these instruments like VIX 75, it moves very fast. So with a smaller lot size, you can make a lot of money, right? It is the same as trading something like VIX 75S, but it moves very slow. So for you to make a lot of money, you use your lot size to move it, which will be the same thing. So for instance, instead of using a smaller lot size on VIX 75, you can use a bigger lot size on what? VIX 75S.
Yes.
But in my opinion, I think I would prefer trading VIX 75X than trading VIX 75, because if I am the one using the lot size, it means the power is in my hand to control how
exactly.
account goes. But if the market is now deciding how fast the market is going, it means the control is not in my hand. That is how I see it. So what I've now, like I was trading all the VIX instrument, but for a couple of weeks now, I've been just focused on a few instruments, and you would see that from the kind of analysis I've been sending lately. I've been focused on VIX 10x, 10, 25, 50, and step index. Those are the ones I've been focusing on, and 100x and then VIX 100. I look at all the other instruments, but I've limited myself to taking trades on these. You can make so much money. Like, truth be told, the highest amount of money I've ever made on VIX was trading VIX 10. It was not VIX 75. It's not VIX 75x. It is not 50x. It's not 25x or 100 or any of the volatile instruments. The highest amount I made was on VIX 10. So it doesn't matter if you're trading 75. Most people think you can make so much money trading 75, which is very true. But I realized that I make a lot of money trading 75, but my highest losses are also from 75. So then it doesn't make sense. If I'm making more and I'm losing more, then
Losing more, yes.
So what I would advise you to do is to, as I was saying in the chat, if you would drop the volatile instrument for now and see how. So it's good you drop the step indexes. And currently I've dropped the new instrument that was just introduced. So 200x.
Yes, and then 300, okay.
And then boom, especially those that trade boom and crash. Boom 300 and crash 300. They move a lot, but especially if you are using indicators, like there are not even enough candle going into the past for you to be able to do enough technical analysis, because they just started, like there's not much data for you to see how
Data for it, yes.
historically it moves. So it's very tricky in that kind of aspect. So what I would advise you to do is to drop so now you drop the boom and crash, right? Drop VIX 75, drop 50x, drop 25x, and if you'd like, drop 100, because 100 is also volatile. But if you want to add one volatile instrument to your portfolio, you can add 100 to it, because 100, it respects the EC a lot. So if you want to something volatile but don't go too crazy on it, and you want to add that to your portfolio, it's fine. But if you want to go solely low profile and then use your lot size to manage how the market is controlling your account, then I would advise you drop those instruments and stick to 10x, 10, 25, 50, 100x, and then step index. So in that case, you would have one.
Well, sorry, how about drop 10 as compared to step index?
So it's I decided to go with step index instead of any of the jump instrument, because the jumps are also new. So there is no a lot of historical data compared to them.
Okay.
Yeah, so of late, like the jumps, they do give really decent setups, but I find step index to be, I've not really, like, truth be told, I've not really spent a lot of time analyzing the jumps like I've done with the other instruments. So I can't really say, but my choice of going with step index instead of any of the jumps was because of historical data. But the jump 10 is also something that is quite okay. So if you want to add one instrument from the jump, you can add jump 10. So you can add 10 and drop step index, or add it to your portfolio, or exchange it with VIX 100. It doesn't matter which one you are trading, but the point I'm making is stick to the very low volatile instrument.
Other ones, yes. Because you see, step has actually messed me up because I think it has so much manipulation sometimes. You can see a trade go the proper way, but before it goes there, it will take a lot of nonsense, and so a couple of times, what will eventually happen is I'll have to enter like 6 or 7 times. Yes, we know the trade is going in that particular direction, but you've gone in the first time, hits your stop loss. You go in again the second time, hits, at some point you get tired. What will now eventually happen is when you now relent and say, okay, I think I'm not trading this anymore, you understand, and just leave it. You come back maybe like the next day, then boom, it has started the move.
So one thing I've seen with step index is it makes a lot of sense trading it on a higher time frame. So it's very good to swing it because it consolidates a lot. But the structures on the daily time frame are like very straightforward. So currently this is on the daily time frame. So after the break here, you see, spent a couple of days here testing. After the break, it's consolidating, but you see the structure goes here. Here, it created this resistance here, and it's been dropping since. So the approach to trading step index is sticking to the higher time frame and going long term. Like instead of like trying to catch very small moves on the 15 minutes time frame, like you could make a lot of money from very small movements, but long term, if you want to make good money, it's better to go for the long term swings. Like on this 8 hour here, after the break here, since like, what is the date here? Since like 2 days ago, after the break and retest, this is on the 6th. So for almost like 3 weeks now, this thing has just been dumping like that. But if you look at it, you see the candle is up and down, up and down. But long term, if you had this entry here, you can swing this, and then you forget about all those up and down movement. Even if it is 1 or 2 entries on 0.2, long term, this could make you like $200, and that can help you to build your account slowly. And also, it's better than taking the trade 6-7 times and losing money half and making money one. So that is one approach to trading step index. If you want to filter the noise, it does really good on like long-term like swings, like especially when it breaks major structures on the 8 hour the 4 hour and then the 1D time frame. It gives like really good. And then one thing to also do is avoid trading them in a consolidation phase. Wait for a clear breakout. Like when price is doing up and down like this, just forget about it. As soon as it breaks trend line and retest the breaking level, that's when it's a good time to go in. So that's one approach to trading step index. But